Welcome to the ultimate guide on Ohio tax residency. If you're considering moving to the Buckeye State, or you're someone who splits their time between different locations, understanding Ohio tax residency rules is absolutely crucial. Your residency status will have far-reaching implications on your financial obligations. In this video, we will break down everything you need to know about establishing and maintaining tax residency in Ohio, ensuring that you navigate this complex tax landscape with confidence and clarity. So who qualifies as an Ohio tax resident? Ohio law stipulates specific criteria for determining tax residency. The first and foremost factor is your domicile, which is essentially your legal permanent home, the place where you intend to return after any temporary absences. The Ohio Department of Taxation will examine various factors to evaluate your domicile. It's not just about being physically present, it's about demonstrating your intent to make Ohio your permanent home. Let's delve deeper into these important criteria. Next, let's discuss the 183-day rule. This physical presence rule states that if you spend at least 183 days in Ohio during any calendar year, you are presumed to be an Ohio resident for tax purposes. That's over half of the year. One key point to remember is that partial days count as full days. So, if you enter Ohio at 11:59 p.m., that day counts towards your 183 days. This makes it vital to carefully track your time spent in Ohio, especially if you often travel between states. Establishing your tax residency in Ohio involves a few key steps. First, you need to update your official documents to support your claim of residency. This includes registering to vote, obtaining an Ohio driver's license, and updating your address on relevant legal documents. These actions create a clear paper trail, demonstrating your intent to make Ohio your permanent residence. Additionally, maintaining meaningful ties to Ohio through financial and community connections will strengthen your residency claim, showcasing that Ohio is truly the center of your life. Finally, we'll touch on how to avoid common pitfalls when establishing residency. One major mistake is inadequate documentation of your whereabouts. If you ever find your residency status challenged, having a detailed record of your movements throughout the year is invaluable. Additionally, inconsistent behavior, like asserting Ohio residency while keeping significant ties to another state, can raise red flags with tax authorities. Understanding local taxes is essential too, as different municipalities can impose their own income taxes that significantly affect your tax obligations. Research